John.
Merryn.
Pensions. Normally it's property, but today, pensions. You know how the weekend papers are normally jammed full of misery, right? You read the stories and you think, God, this is awful. This week, our competitor friend, Claire Barrett, wrote a piece about a man called Martin, and I cannot get Martin out of my head. I can't. You know, Martin is coming up to retirement. It's not funny, by the way, John. Actually, this is not a funny story.
The way you phrase it.
It's not a funny story. Martin, one day he looks at his pension pot. He sees he's got 200 grand in it. Looks at it again.
That's not bad.
Yep. Looks at it again a year or so later. 134,000. Maybe 135. Can't remember exactly. This guy is running up to retirement. 1/3 of his pension money is gone.
Yeah, that's kind of nasty. Was he invested in some dodgy tech stock or something like
or a cryptocurrency or something like that? Had he maybe gone OTT on buy-to-let properties no one wanted to rent? No. What Martin had done is left his money with one of the UK's big pension fund managers. Yeah. And they had moved it because he was coming up to retirement and they were running a strategy called lifestyling, whereby you're defaulted into what they call a lifestyle fund. And in your younger years, you're in mainly equities because that's high risk. Yeah. And then as you get older, and my pension fund does this, by the way, and yours probably does too. As you get older, they lifestyle you into something low risk. Really, 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 really low risk. But nothing can possibly go wrong. And he was being lifestyled into, from what I can see, a bond fund that held mainly gilts. And he was in it at exactly the wrong time. This is particularly relevant because of the guest we have coming up, by the way. When the gilt market went slightly ballistic, and that fund lost 50%.
I mean, that's awful. And it's also, obviously, it's extra awful because you think I'm investing in government bonds, therefore those are safe. You know, these are the things that are always described as safe. And I'm assuming those must have been pretty long-term bonds to have lost that amount of money.
I'm assuming so.
Yeah.
Anyway, either way, he was in something safe. He lost a pile of money. And he does not obviously have time, if he's running up to retirement, to sit around. And as you say, they're long-dated bonds. He's not going to sit around and wait for 30 years to get that money back. It's gone.
Should we explain to people why this gets done and why in the days now that you don't have to buy an annuity, it's a complete anachronism and it's somewhat deranged that the financial system has not got round to changing the way that it does things?
Good idea, John. Why don't you do that?
All right, so in the old days when you had to buy an annuity, and what was interesting, when you look at the comments under Claire's piece, a lot of people say this without actually realising they're talking rubbish, but it's like the defined benefit pension schemes and how they were using LDI, is this idea that because the interest rate goes up, so the price of the bond goes down, but the annuity that you can buy with your diminished pot of capital is actually basically the same or roughly the same, because at 1%, 200 grand will buy you a very small annuity. Whereas if interest rates go up to 5%, then 130 grand will buy you something like the same annuity or maybe even a slightly better one. The problem, though, is that our pensions don't work like that anymore. You don't have to buy an annuity whenever you retire, or the minute that you retire at age 65, or what it used to be. And so now most days, or more people just draw down their pensions. And so being shifted 100% into bonds at any given moment in time no longer makes the same sort of sense that it used to, whenever you essentially had to crystallise whatever was in your pot and use that to buy an income at a given point in time.
Yep. Very well explained. Gorgeously explained.
Does that work?
Yes.
Does that work good?
Yeah.
But the things that changed ages ago.
It
so
changed
it's kind of
ages
weird.
ago, and they're still putting people into these default lifestyling funds. And the key is default, I think, in that because people get put into this default, they could get something else, they could choose something else, but there's a default. They're not obliged to engage at the beginning of the process, right? Yeah. So they don't understand the process, so they don't know that this could be a really bad idea. Yeah.
And also, but I suppose the other thing is people don't check their funds probably often enough, because I mean, my heart, goes out to Martin, and I don't think he's unusual, but clearly at some point between 200 and 130, there were points at which the fund was, you'd have looked at that pot and gone, wait a minute, what's going on here?
Yeah.
I don't think that happened inside a month. So it's that thing of being aware of what you're in.
Yeah. So I was thinking about exactly what should be done about this. What should people do? And obviously the first thing is to get onto the website of your pension provider. And obviously most of these websites are absolutely useless and it might tell you nothing at all, but it might give you a clue. I mean, I did this again with this very small pension that I have with Aviva. I think you might have one of those too, John. Worth checking.
Yes.
The default there is one of these. And it will start 10 years before retirement. It will start lifestyling me. Right? And I couldn't find anywhere where it told me when my expected retirement date is. But I found somewhere where you can change your expected retirement date. And I was thinking about what should the lazy person do right now? Obviously, the proactive person should go in and look at what they've got, think about it carefully, and possibly shift to another fund if they're being lifestyled and they don't want to be lifestyled. Some people may want to be lifestyled. That's fine. If you don't want to be lifestyled, you can shift into a fund, maybe designed for a younger person, something like that. But if you're really lazy, you can do what I've just done and go onto the pension fund website and change your retirement date to 75. That way,
that's a good idea.
Yeah. Now they're not going to start lifestyling me until I'm 65. And I have delayed that admin for years.
That is a really clever piece of arbitrage. I like that.
Thank you very much. Personal finance tip of the week. There you go. Welcome to Merryn Talks Money, the podcast in which people who know the markets explain the markets. I'm Merryn Somerset Webb. This week, we bring you a conversation with former Chancellor of the Exchequer, Kwasi Kwarteng. Now, he's obviously was Chancellor for a short period of time. He had many positions in government before that, but also relevant to our conversation is the fact that he has a PhD in economic history and has written a variety of very interesting books, including War and Gold, which I'm working my way through at the moment and strongly recommend, and also one that has been discussed quite a lot over the last few years that he co-wrote with a variety of other MPs, Britannia Unchanged, Global Lessons for Growth and Prosperity. And if you haven't read that one, again, I would suggest it. We're going to have to start with your time as Chancellor because it's incredibly interesting. Now, I don't want to go on about what went wrong, particularly, although we might a little.
Why not?
I think we can assume that what happened here was that you had great policies. Well, a lot of people would say great policies, but a lot of the things that were done were far too fast and without particular reference to how the markets would react. Is that fair?
Yeah, I think the speed was what was at fault, really. I think it was far too fast. Far too much. I mean, I took office on the 6th of September. The budget, the so-called mini budget, the statement was on the 23rd. And of course, we'd had, the passing of Her late Majesty, Queen Elizabeth II in between. So it was a very febrile atmosphere. And I think we took it too fast. And even at the time I was reticent, was that we discussed spending plans. In fact, I think Simon Clarke, who then became the Levelling Up Minister and has been in the papers recently, calling for Rishi Sunak's removal, which I don't agree with. But Simon publicly said that we were, all through the leadership campaign, we were looking at spending restraint and savings. And I think, looking back, and even at the time, I thought it would be a better idea to present the tax cuts with some spending restraint.
Because there were a lot of tax cuts. I mean, that was lot up front, taking away 45p, corporation
the expansion
tax,
was
etc.
45 billion on the scorecard. And of course, that was on top of the energy intervention, which was scored at about 60. And I think, understandably, markets were got concerned. Looking back, and we discussed it at the time, I think the expansion should have been less than 45 billion. If we'd stuck to what Liz Truss had campaigned on, namely the not increasing corporation tax from 19% and also getting rid of the NI, that was scored at 35 billion. And along with the 35 billion, we should have presented some savings. Now, these aren't cuts. They're slow, they're reductions in the rate of growth. For mathematicians out there, it's the first order. It goes down. So that means that spending isn't going up as fast as you had anticipated. It's still going up, but instead of, let's say, 2 or 3% a year, we were trying to restrain that growth to something like 1% a year.
But the idea being to get GDP growing faster than spending.
That's right. That's right. Because it's a very simple equation, but if your public spending is going faster than your GDP, or certainly your tax take, that just means the state gets larger and larger as a proportion of GDP. And I think that has an adverse effect on growth.
Interesting. Let's just pick up why that has a terrible effect on growth. I mean, we know that, or I feel that we know that instinctively, right?
That's right.
The bigger the state gets, the worse the private sector performs. But why is that? How does that?
So I think that the problem that you've had over essentially the 20th century is that you've had states that have grown bigger in terms of spending, but a lot of that wasn't deliberate. I mean, if you think of the events of the 20th century, you had 2 world wars and they massively increased spending. Arguably, COVID was another situation, almost like an emergency war type situation, where the state was expected to spend huge amounts of money in very short order, short time. And that essentially, because it ratchets up debt, it ratchets up taxes because you have to pay for the spending. It does crowd out private sector investment. And that is a limit in itself, as a limit, or imposes a cap on growth.
Yeah. So the bond market, one thing that you discovered, that many people in governments around the world have discovered over the years, is that bond market is slightly nuts, incredibly powerful.
That's right.
And slightly irrational in that,
yes.
It accepted all that massive boost in spending during COVID literally without blinking an eye.
That's right.
But then looked at your policies and went slightly
and it
mad.
freaked out. And I said, in the future, we'd already said that we were going to have a statement on spending. But because when I said, in the future we want to reduce taxes, then people went nuts as well. The markets went nuts. But I think my main lesson is that you have to do things, you have to prepare the pitch. You have to do things more deliberately. I think there was a real urgency to get things done. I remember the Prime Minister said, I've only got 2 years. And I thought, well, if we carry on like this, you'll have 2 months. I said that to her after the mini budget. And I think that, it's always a case of slow and steady wins the race, I think, in terms of government policy. Because you're trying to move, when you're in government, especially with very large economies, it's like trying to move a supertanker. It takes time to turn corners. It takes time to get that sort of acceleration and momentum that you need. And I think trying and expect to do things very quickly, I think it does add to the risk, certainly.
Although it does slightly feel, if you think, that we've been moving in the wrong direction on growth for decades.
For a long time.
And that you have what could be a relatively short period to turn things around. Maybe you do need to move fast. I mean, if you look back at, decades worth of people going on and on and on about how we must have growth, but not setting an environment that will give you growth. And politicians relentlessly talk about how we're going to create growth. But of course, you can't create growth, or I don't think you can create growth. All you can do is create the conditions.
That's exactly
in which
right.
growth can happen, right? So you can set up an acceptable, uncomplicated, and reasonably low tax system.
That's right.
You can have a very good education system, which of course we have done well at in much of the UK.
Right.
You can set up a legal system that everyone trusts.
That's right.
You can have an infrastructure that works,
all of
transport
that makes
system
sense.
that works. All these things. That's all you can do, as far as I can see.
Yeah.
And then you just get out of the way. But we've had successive governments who have been unable to produce that environment and absolutely unable to get out of the way.
So the problem that I think we have in Britain, and it's all across the West, it's not just a British problem, is that governments have a very short-term focus. And also with the chops and changes, you keep switching, one keeps switching. So, if you look at something very simple like capital allowances, the amount that we were giving people in terms of capital allowances businesses kept changing every year. So it was very difficult to plan in those circumstances. I think you're right to say that time is short, but, I was thinking we had the autumn statement and we would have had a budget in spring, and that would have been 6 months in which we could have set the parameters that you're talking about. Obviously, for longer term growth, you need to have much more stability. And one of the places I looked at, and I'm still very interested in, is Ireland. And if you look at their corporation tax policy, I think they've set that in about 99. So nearly a quarter of a century, they've had exactly the same corporation tax rate, regardless of who was in power. That's a really good model of how you can set conditions, regardless of who gets in, for growth. The British example of that, I think, is when Nigel Lawson set the top rate of tax in 1986, I think it was, or 87, at 40%. Now that lasted 20 years, and that was a very good, again, quite permanent, so it seemed at the time, tax policy that everyone understood and that sent a very good signal. I think where things start going wrong is when you keep chopping and changing, increasing rates here, reducing them there. there on a kind of continual cycle.
It's also when you make it very complicated, isn't it?
That's
because
right.
The more complicated you make taxes, the more stressed people are about them.
I totally agree
And one
with
of
that.
my big bugbears is inheritance tax. I'm not alone in that, obviously. Sure. But if you think about the amount of stress that inheritance tax causes older people because they believe that it is possible to avoid it.
That's right.
So they think about it.
And there are lots of loopholes.
The time.
Yeah, there are lots of loopholes.
But those loopholes mainly exist for the very rich.
Yeah, that's right. So if you buy a forest or you buy a farm, that's right. All of
whatever.
That.
But if you're a middling sort of person with one house and an income that you need to live on, you feel stressed by the idea that you could avoid it.
Yes.
And that you kind of haven't.
So you're right. So I think the simplicity of taxation is something which we've got badly wrong in the UK. I know we had an Office of Tax Simplification, but
doesn't really work.
It was hopeless. Yeah, I mean, it was there been there for years, and it didn't really do anything. And I think there's a lot of political will that's involved that is needed. But that's something again that if I obviously had longer, that was something I was going to look at, and I was very interested in.
Yeah, okay, well, let's talk about that, what you would have done if you'd had longer. So spending was coming next.
Yes.
Where would spending have been, as you say, not cut, but cut in real terms? Where would we have seen
it's not even cut.
cuts?
It's what I'm saying is that the increase, needed to be reduced. The rate of change, even though it was going up, that needed to be slowed down.
But it would probably have been in real terms cut, don't you think? If you could have pushed growth to say 2.5%.
Well, it depends on
inflation up around there.
Obviously, it depends on the inflation.
Spending up by 1%, 2%,
it depends
et
what
cetera.
the inflation is. It depends what the inflation.
Yeah, but nonetheless, what is it that government does that government could not do?
So
I
think
do less of?
So I think it sounds like an old cliche, but what you have to do is try and, I think, cut across in the round. I think what we've done in the past is we've ring-fenced things, and the things we ring-fence sort of get favoured status and are less likely to find efficiencies because they know that they're going to get the money regardless. And then the other departments have been cut very severely as a consequence of the first departments being ring-fenced. I think what you have to do is look at an overall, and this is essentially what Jeremy Hunt has done. I mean, post the election, what the Tories are committed to is a 1% increase in public spending in the round. And I think that's probably a better approach than having sort of favoured children, if you like, or favoured departments being ring-fenced and then others having to bear the brunt of public expenditure cuts or restraint.
I'm still going to push you on this slightly, just because, there is often talk about, and particularly on this podcast, actually, about how the government does too much, how it extends now into every part of every life, everything that you do is somehow influenced by the government. Are there areas where state spending can actually go, where the government can be made smaller? You're a small state person.
So this is very controversial.
And you're also a balanced budget person. In the end, by the way, listeners, you must read Kwasi's War and Gold.
That's right.
Which is excellent. And a lot of that is about how, budgets must be balanced.
I am a balanced budget person. I know
you can't run a constant deficit. No. You run deficits in wars and then you sort them out afterwards. The last time that debt in the UK was this high, 100% of GDP, etc. 2.5 trillion. What are we on? 38 grand a person. The last time debt was anywhere near this high as a percentage of GDP, it was on the way down.
That's right.
Not on the way up.
That's exactly right.
So if we want to get back to anything like that, we have to say the role the government plays is too big. It has to get smaller.
So you will know that if you ask a politician, where are we going to cut the spending? And they say
it's
something.
It's impossible for anyone to answer.
That's a huge, political sort of political fight that you set up. And I think was why Liz Truss was reluctant to go down that route, but I think just tentatively, I think that areas where the public spending has gone up through the roof, for example, the NHS, there's got to be a more efficient way of delivering top line services than simply, funding, without any accountability, things like the NHS, and there's specifically, salaries of workers. And I'm not talking about nurses. I'm talking about very high-end people, managers. There are lots and lots of managers. If you look at local government, again, there's lots and lots of bureaucracy. And it's very unclear how that bureaucracy is actually delivering on the front line. So there's a whole sort of administrative and services budget around different departments that in the last few years has gone through the roof. And that's why I'm really impressed with the Prime Minister in the attitude he took to the strikes and public spending, because we have to show restraint in terms of salaries. And I'm not talking about people on, earning lower incomes. I'm talking people at the top. And that's seen massive, huge increases, which, if restrained, I think can have savings and will lead to again, as I say, a slowing down of the increase.
Yeah. It's a bit the NHS, it's a bit, I was going to say it's a bit like the post office, which isn't quite what I mean. But in terms of the way that we have these huge organizations that are technically owned by the state or technically owned by the taxpayer, but there is no way of them being accountable to a board of directors in the same way as a company. So, we used to worry in the old days about managerial capitalism, about the CEO of a big company having full control over that company because the actual owners of the company were so diverse and widespread that it was impossible for them to have any control or indeed any interest in how a company would work. So we used to worry endlessly about one man being in charge of one big company. Now we don't worry about that anymore. We worry about money manager capitalism. We worry about the big shareholders having too much power. But things like the scandal of the post office and the difficulties of the NHS kind of bring my mind back to this idea of how dangerous it can be to have a large organization that has managers who are not really accountable to any particular.
So that was the issue.
People.
This is one of the big issues of the British state. I mean, before I was Chancellor, you will know I was Secretary of State for Business Enterprise. Actually, it was called Business Energy Industrial Strategy, BEIS. No one actually knew what BEIS stood for, but it was Business Energy Industrial Strategy. And it's been split up into 3 departments. Now, as Secretary of State for BEIS, I was responsible for 43. I remember counting them, and I knew them all at the time. 43 organizations, including the post office. And I was essentially ultimately going to hire people to run those organizations. But there were 43 of them, from the Met Office to the post office to, British Nuclear.
It's just too much.
The competition authorities, the CAA was the Department of Transport. But I had 43 of these. And it was very difficult to see, the groceries adjudicator, and it was very difficult to see how transparent these organizations were, because you've got a department, you've got one Secretary of State, and you've got 43 of these organizations. That was just one department. The Transport Secretary would have maybe 20 or 25 such organizations. And all of these organizations have a corporate structure. They all have people, experienced people running them. But it's very difficult to see the oversight. And most people wouldn't know who they are, even though they wield in their own domain huge amounts of authority. They get big salaries.
Yeah. Well, we always wondered during the pandemic, one person you very rarely heard on the radio was the person actually in charge of the NHS.
That's right. Exactly. And I was never in the health department, but that's a huge, if you could imagine, Secretary of State for BEIS and 43 arm's length bodies, they were called. You've got the health secretary with this huge behemoth called the NHS, which is, I think, the biggest employer in the world, practically after the Indian Railway.
Second, maybe, yeah.
And it's very difficult to see or know, what levers to pull and who the actual people who are the decision makers in that organization are. And that's a huge problem. And that's something which I think most ordinary voters are not aware of, even though these organizations have huge bearing on people's lives.
And are effectively independent.
And how you manage that, I think, is very difficult, because these organizations have grown immeasurably in the last 20, 30 years. And they're more and more powerful, but they're less and less accountable. And that's a big problem.
Okay. Now, lots of problems here, which we can't solve, I'm afraid, today. But there is one person who can solve problems, has the power to solve problems right now, who's Rishi Sunak, right? Now, he has a limited amount of time left. I'm not going to ask you to agree with me on this, but he's quite clearly not going to win another election. So he's got this period of time in which he really has nothing to lose politically.
Sure.
And if you were Rishi and you were sitting there today thinking, look, I've got this certain amount of time and I have the ability to do something that may be incredibly unpopular, may be very difficult, but could be the right thing to do for the nation going forward. And whether it makes me popular or unpopular is by the by at this point. So I can do it. What might it be, do you think?
So I think you're right. I think in a way he's quite liberated, because nobody's expecting him to win. And all he needs to do is really just do what he believes in.
Yeah. So what would be the gift to the nation?
I think the tax burden is something which he has to look at. I'd be amazed if after the budget this year, we don't see some tax cuts. Because essentially, if they don't cut taxes, I think you're essentially running on the same program as the Labour Party.
But it'll be nitpicky, won't it? I mean,
I don't know. I mean, it could be quite radical.
The wholesale reform of the whole thing. He could combine.
He could have done that. I mean, he's had a year. Exactly.
Deal with VAT.
He's had a whole year to plan that. And who knows? Maybe they've been working behind the scenes to reform our tax code. I doubt it. I think it will be, as you say, a bit sort of nitpicky and piecemeal, but we don't know that.
What about net zero? Could he give the nation a gift by making that less strict,
well,
taking it out of law or something like that?
I think reversing the legislation is going to be very difficult. He has indicated a pivot away from net zero in the sense that, you know, the 2030 deadline on internal combustion engines, that's been shifted out, I think, to 2035. He's very much toned down the rhetoric on net zero. I think oil and gas licenses are coming back, which I think is good, because to ban them is insane, because you're just going to simply rely on foreign oil and gas. That's what's going to happen.
We still use oil and gas. We are going to do for decades to come,
right.
possibly forever.
So to say that you're not going to produce it in your country, but you're going to import it from wherever else, it increases the cost and reduces the security. So I don't understand why anyone would want to do that. And it's good that he's faced down, in a way, the more extreme green lobby on that. So he's done some things.
But you don't think the legislation is reversible? Because it has an impact on everything, doesn't it? We were talking earlier about infrastructure and the difficulties of that.
I think that would be... So if you look at the net zero legislation, and I was responsible for some of it, certainly it's, you know, following it in Bays, it's actually attracted a lot of capital. So if you look at the offshore wind auctions, you look at the renewables developments. I mean, obviously we had this check last year when they didn't. I mean, that was a disaster, frankly. And I think it was ministers and officials dropped the ball on that. But generally, we've been very successful in driving investment, inward investment into new technologies. And I think to reverse the legislation would be a very bad signal for those investors. And so I don't see that happening, as well as a whole political headache with people for whom it's very important.
But there within is disagreement about it. For a couple of years ago, there was no disagreement about whether net zero is a good thing or not. Now there's definitely there's some water, you know, clear blue water, whatever you want to call it, between the two parties on this issue, which hadn't been the case. I mean, I think the original Climate Change Act was 2008. And really from 2008 until pretty much last year, there was quite a degree of consensus between Conservative and Labour on the net zero agenda. From my point of view, I think that was probably a good thing, because as I've said, we had legislation, we managed to set up CFDs and other structures that really crowded in private sector investment. And we saw huge amounts of investment, particularly in offshore wind, where we were the leading nation in the world. I think China overtook us about 18 months ago, but we were the leading nation until that point in terms of the rollout, installation of offshore wind infrastructure. So now, I think for political reasons, probably, Rishi Sunak has decided that we shouldn't go too fast in that direction. And I think he's probably right. I think people have a feeling, particularly when energy prices were very high last year and at the end of the year before that, that we shouldn't be sacrificing today's consumer for a hypothetical target, you know, in 30 years' time. Yeah. And we also can't go much further without a massive overhaul of the grid, which is insanely expensive.
That's right.
And people are going to feel a little less good about net zero when the pylons go up in their back gardens.
That's all right. So it has to be coordinated. And the other thing that I think is most important, if you're looking at the global picture in terms of global warming, global climate change, other countries have to be aligned. It doesn't make sense for us to reach net zero and for every other country to be miles behind. That's not going to help the climate. We're 1%, I think, of the global economy, and a lot smaller proportion of the global population. So it doesn't make sense for us to simply try and force through net zero without regard to other countries. So it has to be a global coalition. And that's where, but again, it's a delicate situation, because in order to coordinate or help coordinate a global response, we need to show that we're leaders. And I think we're doing that. And I think, if you look at the amount of carbon emissions that we've reduced since 1990, which is the base year, we've actually done a reasonable job. I think it's something like 50%. We're emitting 50% less carbon. And people will say, "Oh, well, you."
So we've gone a long way down the road already.
Yeah, we have.
And going any further might be difficult for us.
So if you look at where we were, the base year is 1990, which is 34 years ago. We've actually made quite a lot of progress. And we don't need to wear the hair shirt and beat ourselves up, particularly if other countries aren't following.
Okay, so what is going? If you were Rishi and you had these few months in hand, what would be your parting?
So I think
gift to the
tax is a
nation?
big. I think tax is a big. I think tax is a big.
If you could abolish a tax completely, because we have a lot of taxes that create a lot of friction in our business world, in our personal worlds, etc. What would go?
The tax that I don't think they've got enough time for this. Yeah. But the tax that really irritated me, as not only as a finance minister but also as a constituency MP, was business rates. I mean, business rates have been around for about 500 years, and they completely discriminate against physical shops, physical units, as against the internet shopping. And they're a big revenue raiser for the Treasury. And I think that some form of reform of business rates is something that will happen. I'm not sure whether Rishi is working on that. I don't know what his thoughts on it are. But that seems to be unfair. And of course, the other tax, which is particularly galling for families, is inheritance tax. And the annoying thing about that is that it hits people, particularly in the southeast, who may have a principal home that's worth, I don't know, £750,000. Yeah. They are affected by inheritance tax, not business rates, inheritance tax. And obviously people who are a lot wealthier can escape that. There are lots of loopholes. You can buy farms, you can buy forests. Yeah. There are lots of ways of avoiding
AIM stocks, etc.
Inheritance tax.
I mean, you could solve that by getting rid of inheritance tax, but turning it into a gift tax so that it's paid by the person who receives the money.
Yeah, you could do that. I mean, there are lots of things. That would be
rather easier.
There are lots, and actually the problem that we have with our tax system is that it's almost like a Christmas tree that's accrued lots and lots of different things over the years.
Yeah, and we haven't start from here.
What?
You wouldn't start from here.
You wouldn't start from here at all. And and people are very reluctant because the Treasury, they're very interested in revenue raising. If you try and change taxes, that can have an adverse effect on your revenue. And so there's a real reluctance, an inbuilt reluctance to see any reform on that.
Yeah. Yeah, and there's always a lobby group to push back on everything.
Always.
Now, speaking of, Bank of England. Now, there was discussion when you were Chancellor and Liz was Prime Minister, possibly about talking about the independence of the Bank of England, given their appalling performance during the pandemic and the inflationary incident. Now, they... Would you say the Bank of England was responsible to a degree for the inflation that we saw?
I think they were quite slow. And actually, to be honest with you, they did two things. Not only did the governor say that we were a bit behind the curve on this, they've got Bernanke to do an independent sort of investigation
of just how awful their models were.
As to what went wrong. So if you're not going to bring in an American Nobel Prize winning economist, if you felt that you'd done everything right, so they've kind of admitted more or less that they were a bit slow in terms of the interest rate increases. I think independence of the central bank is absolutely non-negotiable now. The rights and wrongs of it we could have discussed. I mean, I'm old enough to remember when it happened in 97. But I think to reverse that would send, again, a bad signal.
Again, a terrible signal.
Exactly. So I think it's something that we have to live with.
But it does gives them, and we talked earlier about these huge organizations inside government and the power that they have. And the Bank of England does have extraordinary power.
Huge power.
And particularly with the age of quantitative easing, they effectively have given themselves a type of fiscal power, because by affecting wealth, which you do with very low interest rates, you effectively, change the fiscal environment. And that's very uncomfortable in lots of ways.
And they're a hugely powerful organization. And again, like a lot of the quangos and the arm's length bodies I was talking about, again, there's no accountability. Andrew Bailey, who I think has had a hard time, but I always got on very well with him personally. And I think he's, a thoughtful man. But, he's somebody you can't change. You can't change him. You certainly don't vote for him. And yet they wield a huge amount of power. And that's a feature of modern advanced capitalism, I suppose.
One we just have to live with.
I think so. I mean, you could go a full populist route and essentially, have sort of elections for people. But again, people wouldn't want that, and it would create too much instability.
Yeah.
So I think the balance is to try and make sure that these people are accountable to Parliament and to the executive. And that's something we could do more of. So, Andrew Bailey is now the governor of the Bank of England, but let's say he has a successor. I think that successor should be ratified by some sort of parliamentary committee. And I think they should be able, and they should have certain parameters, certain targets, if you like, that they should be held accountable to. And I think
beyond just the 2%.
Well, if not just the 2% is one thing, but they're not even really held accountable for that, because all they have to do is write a letter, which is, that's all. But actually, it would be quite good to have an annual session in Parliament of a committee where they grill the governor on why these targets haven't been met. They're sort of approximating to that, but it's not formalized. And I think the only way that you can actually square this circle is actually having lots of open scrutiny of these people who, let's face it, haven't been voted for. They're totally unaccountable from a democratic point of view. But they have to be able to answer for themselves in a public arena.
Yeah, and they need to answer for the long-term effect of very low interest rates and what that
That's right. And then it was suddenly, and then, I remember even when I was business secretary, I think the interest rate, the bank rate we used to call it, was 0.1%. And today it's 5.25%. And that's only, 2.5 years?
Yeah.
So it's gone up 50 times in 2 years.
Just it was too low for too long before.
Which exactly.
And that has consequences in all sorts of things.
Exactly.
Misallocation of capital.
That's right.
Businesses doing the wrong things for too long.
That's right.
As one of our guests put it the other day, low interest rates get into all the cracks.
That's right.
Once they go up, you never know what's going to happen.
And also what we think, because we live through this, you've got to, it's totally unprecedented. You mentioned my book. The bank rate, sort of, 200 years ago was 5% for 80 years. So there were people had whole lifetimes and whole careers where they had one interest rate. And actually even the 5% rate, it was only really in the last sort of 40 years, that we've seen huge gyrations and ups and downs of it.
Now listen, do you think that we will be saved from all these terrible things we've been talking about by a great productivity boom brought on by AI? And when I've been speaking to people recently, we talk about the different things that could happen. We could have a roaring 20s driven by huge productivity gains. We could have another 1970s driven by, relentlessly fluctuating inflation because we haven't quite got it right. Or we could be moving into a sort of late 1990s in the markets where we see a sort of slightly pointless melt up.
So I think, the problem in terms of the roaring 20s and huge economic growth, there's too much geopolitical uncertainty. If you look at, our fight against inflation, everything looked as if it was going in the right direction. And then, of course, we had this Hamas incident in October, the 7th of October. And that's really changed quite a bit. I was talking just a few days ago to people who are shippers in my constituency. They do logistics, they ship things all around the world. And they're talking about the Red Sea in a way that we haven't been talking about the Red Sea for quite a while. And the Houthis and the attacks. And all of that could have huge implications, effects on cost of shipping. And of course, the cost of shipping will have a knock-on effect on inflation, cost of imports.
And all this could eventually affect the cost of oil as well.
Exactly
so
right.
That coming through.
So I think the geopolitical climate is such that it's difficult to see a really booming, next 2 or 3 years.
Yeah. And also suggests that we might see a sharp rise in defense spending.
Exactly
which is
right.
also inflationary, because war is always inflationary.
So the geopolitical uncertainty, I think, argues against a sort of benign roaring 20s prediction.
And also suggests that interest rates won't be coming down quite as fast as everyone believes.
All of those knock-on effects mean, I'm afraid, that the economic outlook perhaps isn't as bright as it seemed.
Yeah.
A few months ago.
That was I trying to get you onto something optimistic.
So I think in terms of to argue against that, I think AI is exciting. I think quite a lot of some of the sort of green energy stuff, there might be something to that. I think we should be investing a lot in small, modular reactors.
Definitely.
And I think there are elements when I look at the economy which can provide growth.
But we are going to invest in modular reactors.
Well, I hope so. I mean, I was very keen to when I was in government. I'm not in government anymore, but I think that's what we're going to do. And I think if Labour come in, that they will need a growth plan, and I think the growth plan will hang on a lot of sort of green investment.
Can I ask you about UK stock markets? I mean, one of the things, again, we talk about relentlessly on this podcast is how incredibly irritating it is that UK equities, and particularly small and mid-cap equities, are so cheap and down at the lower end. Liquidity is so low, and foreign investors will not come into our markets, and our own pension funds can't get out of our markets fast enough.
Yeah, it's too lumpy and everything. I mean, a lot of that's to do with regulation.
A lot of it's to do with regulation. So that could be another thing where we may see
right. And that's what we were trying. I mean, Jeremy sort of the Edinburgh reforms, but they didn't really sort of catch on.
Not quite enough. They didn't provide the catalyst. So could it be something like, I mean, maybe the UK stock market is just dead. I don't believe it is. I mean, I think there's a lot going on here, but something like, for example, removing stamp duty on the trading of UK equities, because our stamp duty is incredibly high relative to almost everybody else's. Most developed countries
I think you've got to liberalise
even
it.
Have a transaction tax. I think it's only Ireland that is higher than us.
That's right.
So that seems like a big barrier.
And I think, so there are a couple of things here. I hate to say this, but I think a lot of it is to do with, well, what's coming next. Yes. So for the last year, pretty much, Labour have been clear favourites to win the general election. And I think a lot of people are worried about the effects of a Labour government, which is going to raise even more taxes.
Although, to be fair, this discount has been there since 2016.
The discount has been there before, but it's made of different elements. So I still think that that's still a bit of an overhang. But I think immediately after 2016 until relatively recently, the regulation. I mean, we kept saying, we're going to get rid of Solvency II, we're going to liberalise. Yeah. We just didn't do it.
Didn't do those things.
And we should have done those things much sooner than we have done, or that we've tried to. And again, you're dealing with vested interests. You're dealing with regulators who have a lot of power, particularly post 2008.
Yeah. I find it very, very hard to cut any regulation, because then, of course, they would feel culpable were anything to go wrong.
That's right. So 2008 really, we're living with the after effects of that. We empowered regulators. I think regulation in certainly the context of the London Stock Exchange is really stifling.
Yes, well, companies always say they don't want to list because it's just too much, and anyone who's tried to read an annual report from any company will know that it's...
And lots of people on the private equity specialists, but private companies essentially, are now avoiding, as you say, a public listing. It used to be the aim. Yeah. So, we're going to do an IPO,
and now we're seeing de-equitization. We're seeing company after company after company taken off our markets. And of course, they're trading at such a discount now.
That's right.
That anyone can come in and buy a UK company at a 40% discount and meander off.
That's right. So that's a bit of a, but the political point I fear I made about Labour was that I think a lot of it is to do with, when I was comparing listings in the US compared to the UK, people would, we can earn more money. We can, it's a more pro-capitalist society. People don't have the envy. And actually we can be more successful if we list in New York as opposed to London.
Yeah. What about the idea of a Brit ISA that comes up again and again and again, where we have this wonderful ISA structure, people can put their money in, it grows tax-free, free of capital gains, free of income tax, and then you can withdraw it at any time and without paying any extra tax. It's a fabulous wrapper, very supportive of it. But a lot of people will say, why should we be sponsoring people, giving them tax breaks in order to be able to go away and buy shares listed outside of the UK? Why not just make that a UK-only tax wrapper?
So that's a very dare I say, protectionist way of looking at things.
Might help though.
It might do, but I think there are ways you could incentivize investment in the UK without doing that. I mean, that was one of the things that I wanted to do. The corporation tax, for example. And everyone says, people say 25% is the average. We shouldn't be the average. We don't want to be
Who wants to be average?
Or we want to be a beacon. And actually it's funny because I met the one time I met the Irish president, he apropos of nothing, he suggested to me that for him, the corporation tax, the low corporation tax in Ireland had been a very successful policy. And that was demonstrated, as I said earlier, by the fact that it's been there for 25 years. And neither of the parties, any of the parties that have gone into government have really argued against it.
Yeah.
And I think that, if Ireland could do it, there's a real opportunity. There would have been an opportunity for the UK to be able to attract capital on that basis. And then once you do that, then it has knock-on effects. People come here, they invest here, And then I think you create a culture where the stock market, such as it is, can really power ahead. And we haven't done that.
Yeah, and you could also introduce things such as, no corporation tax for the first 2 years of listing if you're below a certain size. All sorts of incentives you can put in place. And somehow we've just neglected it.
And actually, if I, just to present a stylized fact, when I was in Treasury and also when I was in business, it seemed to me that, growing up, among the two biggest sources of productivity in the UK were the energy sector, which was oil and gas, let's face it, in North Sea, and the financial services. And, they've really struggled in the last, I'd say 10, 15 years, particularly since 2008, for lots of different reasons. I mean, you could argue that the net zero legislation has hampered the oil and gas industry.
Well, or it persuaded people to pull back from investing further in the kind of things that might improve productivity.
But it seems to me, if you just, at its simplest, those two sectors, which, had powered growth in the UK from, let's say, the mid-70s, right through to 2008, they've had real challenges, and we need to get them
back on track.
In a better. That's my view. That was very much my view when I was at the Treasury.
Yeah. Okay. Let me ask you the most important question I ever ask anybody on this podcast, and an answer is compulsory. By the way.
Wow.
I know.
Compulsory. I don't like compulsory things. I'm a libertarian.
Me too. This is compulsory. This is compulsory. Okay. Sometimes libertarians have to do things they don't like. Okay. If you were to only be able to invest in one thing for a 10-year period.
Oh, that's a very good question.
I could give you the choice of the whole world, and I'll do that if you'd like. But first, I'm only going to give you a choice of three things.
Okay.
A deposit account, interest bearing. Yeah. In the UK, sterling.
Yeah.
Bitcoin. Or gold.
I'd probably go for gold.
Okay.
The only problem with gold is that you only get the money when you sell it, right?
Well,
but as a store of wealth.
Bitcoin.
Yeah.
You might not even get the money.
That's true. I mean, it's much more volatile. And also Bitcoin's been around 20 years and gold's been around that 2,000 years. So I would probably go for gold. And also if I think about it, because my book is a lot about this, my War on Gold book, it's a much better hedge against inflation than Bitcoin, or certainly than a deposit account.
Yeah.
So if you think that there's enough geopolitical instability to keep inflation higher, your propensity, I think, to go for a savings account is probably lower. Bitcoin, I think, is just a total crapshoot. You have no idea what it's going to do. So gold, I think, is probably the best. In an age of geopolitical uncertainty,
gold.
I think gold is the best of those three.
Yeah, it's taught us over thousands of years.
Yeah, I mean,
it'll look after us in times of instability. Yeah. All right, go back. You thought I was going to say over a 10-year period, and you could only invest in one thing. What was it? What would it be?
Yeah, I was thinking about that. It wouldn't be gold. It wouldn't be gold.
If that had been the question, what would the answer be?
It's very tricky, because I think a lot of the sort of very hot, sexy industries have got a plethora of businesses, and it's very difficult to know. So remember, when we're old enough, I mean, you're not, but I am.
I think we are.
To the dot-com boom. And it was clear that, people were going to make a lot of money, but it was very difficult to know which companies. I mean, in the end, we had Facebook, which was a bit after that. We had Google, we had Amazon, for example. But there were a whole host of different companies, and it would have been very difficult. It was difficult for people to know which of those were going to be successful in the long term. So you did probably have to take a basket, a portfolio.
Yeah. But would you take a diversified portfolio of equities over gold over the next decade?
Yeah.
Yeah.
Definitely.
Kwasi, thank you so much for joining us today.
Thank you.
Hugely appreciate it.
Thank you. Take care.
So, John, there's lots to pull out of this conversation with Kwasi. It was long and fairly wide-ranging. I found it interesting the way he believes, and actually I kind of agree with them, that a lot of the things that they wanted to do were perfectly valid. It was just done the wrong way round, i.e. deciding to announce all the tax cuts before talking about how they were going to try and slow spending, and doing it all in about 25 minutes. Whereas, in fact, if it had been sort of more drawn out, it might have been fine. I mean, after all, gilt rates are basically right now where they were then. And we're talking about cutting taxes now, despite the fact there's no sign of spending coming off or anything like that. We're just, so now is really no different to then. It's just feels slower and calmer, right?
Yeah, and I mean, I think the fact that he nods to it was clear whenever they came in that Liz Truss felt she had an artificial deadline, or there was some kind of deadline in her head, talking about how she only had the 2 years. And then obviously, the poor Queen died, and that kind of took a chunk out of, the first 100 days that every politician obsesses about. And so I think that sense of panic definitely led to them acting much faster and with a much more aggressive sound than they maybe meant to. And of course, he doesn't bring it up because, he might take, flack for it. But there was also the small point that the pension system in this country was like heavily leveraged towards gilts. And so when prices went down, as I've said lots of times before, the same as prices went down in US Treasuries and German bonds. The difference is that we got a leveraged doom loop because defined benefit pension funds got margin called and had to keep selling gilts, and that's why the Bank of England had to step in. So again, I'll say I think that they were very unlucky, and they could have got away with it.
Yeah, they could have got away with it. And that would have been absolutely fascinating, because then for the first time in however long, we would have actually had a government that were genuinely pro-growth and trying to create real change. And it's one of the things that I asked him in this conversation was, if you were Rishi Sunak today, and of course it's difficult for him because you're still a serving MP, so you can't expect him to say anything too dramatic. But, I have this idea in my head that Rishi Sunak could do something amazing if he was that kind of person, which I kind of suspect he's not. But, he's got a very limited amount of time left as Prime Minister. I can't really argue with that, I don't think, at this point. Although, things turn around on a sixpence these days, so who knows? But, he has a short period of time, still Prime Minister, has quite a lot of support from his party. He could look at himself now and say, okay, I've got this bit of time. I have nothing to lose. I could right now put in place some of the huge reforms that are required in the UK, that are long-term popular and short-term super unpopular and difficult and awkward and, full of pressure groups all over the place, etc. Something like, really having a go at the NHS, really actually working to combine income tax and national insurance and giving us an honest tax system, going for some genuine simplification, finally doing something about the inconsistencies inside our welfare system, although I know that good efforts have been made, but there's many more efforts still to be made. This kind of thing, that there's a chance here. And I was trying to get Kwasi to say, well, the big one is, but obviously he couldn't quite go there. And I get that.
No, it's understandable. I liked his analogy about the tax system being like a Christmas tree that's just accrued lots and lots of different bits of rubbish over the years.
Although, to be fair, I love a Christmas tree like that, so it didn't really work for me as an analogy. I was like,
that's true.
Why would you want to take any of that stuff off? More.
Perhaps it's more like plaque. I think institutional plaque.
Yeah, that's
how
a
I always
lot
think
better.
of it as.
That's a lot better.
But I think the other interesting point is that, you can see that he's he is kind of instinctively libertarian, because when we were talking about the stock market and how to fix it, I kind of mentioned the British ISA, he kind of made the point, which I agree with in an ideological level, that a kind of Brit ISA is kind of nationalistic. But equally, his idea that we should cut corporation tax to kind of Irish levels. Again, I like that idea, but I don't think that would ever pass muster in the UK, because even if Rishi did it as his, I'm about to get kicked out the door, here's a big change.
Yeah,
that's the kind of thing that Labour would reverse. Whereas at least that thing you said about, merging NI and income tax, that's not something that Labour would reverse, because it's actually a good idea. It's just politically toxic.
Yeah.
So that's the kind of thing definitely that, they should be looking at doing now, because you get nothing to lose. The future, everyone will agree with you in reality. Nobody's got the guts to do it.
Yeah,
because
exactly.
No one will like it.
And the reason no one can do it, and particularly the Conservative Party can't do it, is because if you start doing that, then you effectively put up income tax for retirees.
Yes.
And that's the problem. And then you have to, and then if you're not going to put up income tax for older people, because older people don't pay NI, then you have to say explicitly, we are going to charge younger people, a higher rate of income tax than we are older people. That's why you can't do it, except for right now when you could.
Yeah. Good idea. You had Merryn for Prime Minister?
Oh, yeah, no, I'm not sure I could take the scrutiny. I mean, I'd be forever deleting my WhatsApp messages, right? And then how much trouble would I be in? Look at poor old Nicola Sturgeon, right? I mean, you wouldn't want to be her. So no, I'm not really up for senior government positions. Thanks very much. I've got secrets.
Just remember to expense your burner phones. That's the thing. It's like, what? Sorry.
I know. Anyway, not that. This is not that kind of podcast. Not that kind of podcast. Now, look, before we go, I want to come back to our conversation we had at the beginning about annuities and how to provide for your retirement with your leveraging the capital that you have. Now, Mark Dampier, who used to be at Hargreaves Lansdown, he always used to say that the UK equity market was effectively nature's annuity because you got wonderful dividends, and you might say, well, those dividends are not sustainable because the cash is being used to pay dividends rather than to invest in businesses, etc. But nonetheless, that's what an annuity is, right? So the market is nature's annuity, which is a wonderful thing if you have control over your own pension pot and you can invest it like that. So with that in mind, John, I've got a list here of the highest paying investment trusts, the best of the nature's annuities there are out there, and I'm looking through them, and it is fascinating, and Martin, I'm sorry it's too late for this, but for you, but nonetheless, for those of you it is not too late to, this list is really worth looking at. Now, you can get, let's see, we've got yields here of Aberdeen Equity Income Trust, 7.7%. I'm just looking at the UK ones. There's loads of non-UK ones. CT UK High Income, I don't know that trust actually, 6.4. Lindsell Train, that's global, but nonetheless, 6. Lowland Investments Company, which is UK Equity Income, 5.2. We've spoken to them a few times, haven't we? And if you look down at all the other UK equity funds, UK equity income funds, trusts come a little below, JP Morgan, Claverhouse, Schroeder Income Growth, Merchant Trust, City of London. They're all offering yields of 5%. Not bad.
Yeah, it's not bad. And also, if we end up getting an environment where interest rates do end up going lower, or alternatively where inflation still comes back, then you would expect them to be of interest to people because they usually are invested in kind of value stocks. And also, and this is all, if this is UK stuff, then it's cheap anyway. So it feels like a good option.
And obviously in terms of safety, etc., equities are not comparable with gilts, but nonetheless, it's something to look at if you're trying to create an income for yourself in retirement.
Definitely.
Thanks for listening to this week's Merryn Talks Money. We'll be back next week. In the meantime, if you like our show, rate, review, and subscribe wherever you listen to your podcasts. This episode was hosted by me, Merryn Somerset Webb. It was produced by Sema Sadi. Additional editing by Blake Maples. Special thanks to Kwasi Kwarteng.